The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday, October the 5th. And my pleasure to be here. Most importantly, my pleasure to be as the fourth host in the fourth hour. And terrific programming earlier on, really good insight and market discussions. Hope I can continue that. Here we are at 179 up on the Dow at 16,651. Up 23 at 1975 on the S&P. Comp index is up 51 at 47.59. Gold is down 2 at 11.34. Silver is up. Nice divergence there. I like to see that. Up 0.35 at 15.61. Platinum's up 10 at 9.20. High-grade copper is up at 2.34. It's up $2.30 or 2 pennies and 30 cents. And crude oil is up 84 cents at 46.38. Got bonds down a point at 157.26. Got the dollar at this particular up a little bit, and the euro is down a little bit. This is a really interesting market. I'll tell you why. Because we had a call on Friday, soon after the opening, and it was Freeman who was asking me about the levels that I'd be looking at, and he had bought the EMinis at about 18 in the 1888 area. The low was 1883, round number, and it was looking pretty good. And I said we've gone, as we were talking, we'd gone to a B, and I said we could go to a C. I'd drawn in the dashed line that it needed to cross. No, I drew both the dashed line and that pink resistance line. Well, I don't know if Freeman's still holding with Freeman. If you're holding, fantastic call, wonderful entrance, and went to a peak F later in the day at 420, huh? So just after the close. No, how could that be? That's on the 2nd. That's on the 4th. Let me get this right. What is today? The 5th. Oh, last night, of course. It's E-mini. So it closed near the high of the day at 1943. What an incredible move. 1883 to 1943. Goes sideways, pops up to a D, pulls back, and then starts a brand new peak, A, B, C, D. A little spike up here to E, and we'll see if we're able to, if the E-minis are able to take out the 1968. You have 968.25 high, but the other little up channel that's been that I drew in. Remember, this is the chart that has no moving averages. It has no technicals other than I add trend lines, and there's the trend line right there that produces a channel, and that just says later in the day if there's a pullback and the E-minis go under 1960, there'll probably be a deeper correction, and if it goes above 1968.25, you could start to test that resistance line a little high in the 1972 area. Let's get out of that. That's the 10-minute chart. Then I had a question just a short while before I came on from one of the Denners about what was the question? Basil, when ESZ5 trading, how much do you emphasize the Chapman wave count on the 30-minute bar chart? Well, I do them all. I don't chart them all the time. Mostly I'm using 120-minute chart, 10-minute, maybe some shorter term, like 2 minutes and things like that. But the 30-minute is important. I'll grab it every once in a while if I think that there's a question as to where the next large resistance point will be intraday, because that's more intraday, 30 minutes. The 60 and the 120-minute look intraday, but you're really looking at swing. If you look at the 120-minute chart, 120-minute charts can often give you a swing trade of up to 5 days, maybe even a little more. So we'll be seeing if the Friday was the start of a move that takes us into Wednesday. Meantime, back at the ranch, this is looking pretty good. At 91% in the stochastic, MACD is very good. Let's just get out of this and show you something even more interesting, as far as I'm concerned. Here's the chart of the 120-minute E-mini, so December, and it shows you with that pullback to the 1883 level, you started a dashed trend line that was pierced this morning, and now you can go to the upper resistance line, and that resistance line is taking you to, I didn't draw that incorrectly. I usually take 2 points right there and right the body. There you go. That takes you right to where we were just a few moments ago before that little pullback. But now I can start to use other trend lines, and I can take the highs there and use that. And I can take that high and I can extend it out a little bit. And that says that there's a chance that if the E-mini continues this leg C for just a little while longer into 1130, and then starts to move to the downside later in the day or tomorrow, you could see a pop-up that takes out the 1968.25 high, if it isn't done right now. And that would extend and say that a leg D could in fact take you to between 1972 and this trend line resistance right here at 1976. And then I think we're due for a little deeper 120. Make sure you know what I'm talking about. A little deeper 120-minute pullback. We'll be watching this very closely. Meantime, this is what I showed the subscribers over the weekend. I discussed a bunch of things. And if you're just looking at the Dow was suggesting that, well, I think I need to go to my Dow chart that I show every day, that the W soft, I call it the soft W, is like two U's put together or two cup formations put together, one after the other. And it suggested that we could be seeing a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. And now we're looking, that's to the 16,933 top of September the 17th, to the 14, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Let me do that again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So this could go to Wednesday as the cup formation, and the test will be 16,880 to 16,950. Closing above or pushing above 16,933 will make your leg D. A D in this particular formation turns out to be quite positive. I'll be talking more about that. I want to go to Scott in Safety Harbor. Scott, how are you?
Oh, boy, just a lot of stress this morning, so.
Oh, all right. But in fact, you wanted to look at?
Alcoa.
Okay, at Alcoa right now. This is very interesting. You had mentioned Alcoa the other day. Then there was a little bit of a pullback, and they've spun off some one of their sectors. And what's interesting now is trading at 10:01, 10:02. Wow,
well,
somebody must have heard you talking about
contract this morning. So.
I'm sorry, what?
They just signed $1 billion contract this morning with Airbus, so. That's throwing.
Oh, is that what it was? You know, because more and more products are using aluminum to cut down on weight, and I think they're the big beneficiaries of that.
11, but I got scared last week because all the negative stuff. But I should know by now that the powers to be, and I believe there's about 10 different entities that control the market or less, and they decided they wanted to beat it down and then buy it and then sell it. So that's what's happened.
Yeah, and you know what? When we talk about the trading, see now, I got for subscribers, on Friday, I had already started from Thursday night into Friday morning. I was looking at certain positives. What happened was that the sell-off that we got was a lot deeper, and because we were starting to go towards the 16,000 level in the Dow, which is normally an area that I would be considering trying to buy something because of the trading range for the pop-up to the higher level of the trading range in this rectangle formation, I thought, wow, if we take out the 16,000 level, this time we could test into the 15,900s, and that would be different to what we had seen before. So we had taken a couple of short positions, got stopped out intraday actually on most of those positions. But what was interesting is that I had put the levels to short at extremes. In fact, the one we got on the DOG, the 100% short the Dow, was almost at the high of the market high of the day. That's how far out I did it. So I didn't want to hold this. We got out of it this morning. I don't want to mess around, and I'll tell you why. You're looking at Alcoa. I was looking on Friday at General Electric and General Motors, and I said, these stocks are looking really good. They were telling us that there was more internal strength than internal weakness, and that was just once again, it was more like an electronic push to the downside as all the computers gave sell signals, and then they had to reverse very quickly. So when you're looking at individual stocks, like you are in Alcoa, you say, right?
I got back in, but I'm not in the 940 anymore. I'm now at the 980, and I'm still making. I mean, I've got thousands of shares. I'm still making money, but I wish I'd stayed at the 940. I want to interject.
Yeah, but you know, at the 940 level, it went down to 912. If it slipped underneath 912 into the eighths, all of a sudden that's like a different thing. Now it's got to really critical support level in the 1883 level, 1886.
So and once it does that, it's a psychological thing. I think with a lot of people, then it's like, okay, now the trading range is 889 to 920.
Right. So you see, I think sometimes being scared is not a bad thing, because it's the protection that you're looking for.
Basil, because I've made a small fortune in the last 2 years by doing the opposite of what everybody else does, never getting scared, buying when it's bad. And I got that information from watching a show about billionaires one time. And I found out that every single billionaire family in America made their money when times were bad. The Carnegies, the Biltmores, the Kennedys, all when it was bad. They bought like it was going out of style, when
That's
things
right.
were bad.
Yeah, but there are a couple of things. As you was talking, that is a philosophy that some very wealthy investors have had, but at the same time, they are prepared for a 20%, a 30%, a 40%, even a 50% drawdown, because they have the finances to say, it's okay, I believe it'll come back. And
like
that's
the good
that's
poker
fine.
players. They're not clairvoyants or that smart, but what they do is they manage their money well. And you've got to have that money to keep scaling down. But people, I've got a good friend at E-Trade, and every single time, including last week when I spoke to him, I said, what's been going on with new accounts? Zero. Every time the market goes south, nobody opens an account. But when it's booming, I mean, there's people coming out of the woodwork to open an account.
Correct.
To get involved in
So
the
now
market.
let's just look at your Alcoa, folks. Alcoa is trading at 10.01, up 49 cents. The weekly chart is just starting to improve now, but it really needs to take out $10.15 to show that it's got the temerity, that it has the strength to make this a more intermediate term, like a buy and hold. That's the way I'm looking at it, Scott. So I think you're in great. I think the support is at 980.
Today, it's hard to tell if the economy is coming or
about?
going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yes, so this is the TYX. This is the 30-year T-bond yield. Right here, the white. This is the weekly chart. This is the 10-year T-note yield, and this is the 5-year yield. Now, what's really interesting about this is that if you look at it, you remember this is that gray line right across there. For those of you looking at Tiger TV, and that comes in round about, let's say 3.1 on the 30-year. Look how often we've been there. But look what's happened. You see how it's become, it's always very strong resistance and takes a little while to break above. It has like a peak E and it pulls back and then it starts a new move. Well, we had that peak E, the fifth highest peak at 32.55 the week of the 25th of June. This is a weekly chart. And then you made that arch formation. And I should put an A here and I call it a gray A. Why? Because it isn't, I don't yet have any signal to say that it is in a buy signal to buy mode. So I usually just change the color, make it a little darker there. There, gray A. And now what's really important about this is that we have very well-defined levels in the 30-year. And the level is that a close above, this time I'm talking close. You can't just pop it in and pull back. A close above 30.92, that's 3.092%, would suggest, this is a close, remember, would suggest we're going to go and retest the 32.55 high of June, number one. Number two is the opposite, the diametrically opposed, the counter trend move. In this case, I wouldn't even say it's the trend move. It didn't have a counter trend. At this point, the counter trend move is on the upside, not the downside. And that says that a close below 26.25 in the 30-year T-bond yield would define a downtrend that has the possibility to go A to B equals C to D. That's that lightning bolt level that takes it all the way to at least the low of the week of the 27th of March at 24.45. So those are well-defined parameters. Just real quick, we're going to go to our callers now. Again, just to show you, this is in fact, I'll talk about it in a short little while. I want to talk about Fed Chairman Yellen's decisions they said it was based on housing, based on the stock market, and I wanted to show some things why, on a purely technical level, they should be raising rates, but on the other side, there are just so many factors. They must be terrified out of their wits. I'm going to go to Jim in Oldsmar, Florida. Jim, how are you?
I'm great. How are you?
I'm well, thank you.
I had a question about BMY, BristolMyers.
Yes. Do you have a position in it right now?
No, I was wanting to get in, and I noticed it was going down this morning. It's taken a tiny bounce right now up to about 61.92.
So can I also ask you the question, is this because you'd like to treat it as a capital gain stock or a dividend stock, or maybe both?
Probably just a short-term trade or intermediate trade.
Is this a stock that you followed and you keep your eye on quite a lot?
Well, yeah, I was in it earlier in the summer and in a short-term trade, and I made a little bit of money, and I was just thinking that it's down below where I sold it at, I believe, now. So I was just wondering but I'm a little bit nervous about anything to do with biotech and healthcare right now. I didn't know what you might think about it.
You see, this is a very interesting period that we're in right now. That whole sector, the biotech, the farmers, look at this. This is the PPA. I think PPA is not, that's a defense. PPH. The PPH is the Market Vectors Pharmaceutical ETF, trading at 64.13, down 34 cents. Listen, has a chart pattern that's a little bit like the Bristol-Myers. Now, Bristol-Myers is a company that's just been around forever, probably will continue being around. So as a position play, if you were interested in getting in as a buy and hold, I'd have to look at it a little differently, because the whole pharmaceutical sector, I certainly don't have to tell you, I'm sure you've looked at it, but the whole pharmaceutical sector has had spectacular gains over the past few years. I'm inclined to think that this Chapman wave Roman candle of August, with a high of 66.13 and a low of 51.82, and then a close in the middle at 59.47. I respect that a lot, and my technicals are starting to deteriorate. So I'm thinking here that this is probably, I don't see more from 61.69. I don't see more than maybe a test of the recent high of 63. Could go maybe to 64 even. Well, 2 points is not bad. There's nothing wrong with that. The big problem is that if it starts to pull back from here and closes under 60.72, that's the 9-period moving average, then it's just saying it's in a trading range, and the trading range is starting to favor the support at 61. Can you hold on a second? Because I want to put it together with Pfizer so I can give you a more comprehensive look. Okay,
Sure.
We've got Jim in Oldsmar, Florida. We'll be back. We're looking at Bristol-Myers. Dow's up 180. Be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with Jim in Oldsmar, Florida, and we're looking at BMY. But at the same time, I took the opportunity to go to the holdings of the PPH, the pharmaceuticals with Novartis, Johnson, Pfizer. It's got Glaxo, Sanofi, just Novo Nordisk, the whole bunch. BristolMyers, of course, and Merck, and Abbott Labs, Eli Lilly. And I have to tell you, the more I look at these things, the more I think that the sector rotation is saying that the old guard, the ones that had the best move up until midsummer, and that includes just the spring into summer, that includes the IBB, that, as you say, that's a sector that's under pressure again today, the healthcare. My thinking here is that BMY is going to, I don't see that much on the upside, and I see it kind of vulnerable to pullbacks. There are a couple of others that look a little bit better, but they all have that monthly chart that says at this particular stage, most of those gains are done, and that if anything, it's going to be more lower highs and lower lows. So if you're asking me, is this a time to be putting some money into BMY, Bristol-Myers, I'm going to suggest to you that I see the risk to the downside greater than the upside, other than just maybe a quick pop 1 or 2 days. I think that the weekly chart is suggesting that there's more downside risk to come. I hope that at least that's it. You know, this is just one person's perspective, but that's what I'm looking at, and I I'd hesitate because it's the kind of stock that earlier on, if it was bought and held, it went to all-time highs like all the pharmaceuticals. My concern here is that the weekly and the monthly technicals have broken down in such a way that the upside is limited, and any surprise, any negative surprise could suddenly see these things pull back quite sharply. So therefore, you don't get the dividend and you don't get the capital gain. I don't see that as a winning situation.
Okay, well, I certainly appreciate it. Thank you.
Thank you very much for calling, and I hope I'm right, because that's just what the chart's saying as far as I'm reading it. Thank you for calling.
Thank you. Bye.
Thank you. That's Jim in Oldsmore, Florida, and we're going to look back at the market now, and I'm going to show you a couple of things. Alcoa is doing quite nicely. It's now up at 10.12, up 60 cents. It's going for the left side 994 high. It's very interesting. If you look at X, which is steel, steel's just come off the bottom. If you look at AKS, but AKS is a much better chart actually than US Steel. At the same time, their weekly charts are kind of flat. It says, yep, this is a nice rally. Is there enough energy? And this is really an important moment. Is there enough energy in this rotational lower level consolidation to say that some of the stocks that have been absolutely battered? I was looking at UNG, that's natural gas, and I thought, oh, this is very interesting. I've got a signal that says it should have a bounce. You know, a bounce is not a position play. A bounce is something that you buy, you put in a fairly tight stop, and you can have upside targets, but you have no idea if they're going to get there because the weekly charts are so bad, the monthly charts are so bad. And it has to happen with speed. It has to happen with a certain dexterity where the price moves so quickly and so strongly and holds and sustains the move over a period of a couple of days, so that the MACD, the moving average convergence divergence, which is invariably badly hit when stocks pull back sharply, it takes a little while longer than the stochastic to reverse. So that puts you in a position of saying, I've got an entry point, and that entry point is such that the history looking back, look at X. You had that fantastic move off the low back on the 26th of August. 27th is a spectacular move. It goes up 14, 16. So it goes up about 10% or maybe more. And the following day it continues higher. Then it pulls back to the 9-period moving average. And then it never closed above the 9-period moving average until today, with a real good chance that it could close for the first time above the moving average. Well, what does that say? It says, for about 25 sessions, it was under the 9 EMA, the 9-period exponential moving average. And look, there you can see it in the MACD's fast moving average, the green line. It didn't close, and now there's a chance to close above. But the stochastic is still not showing strength at 12%, having been in the single digits. It's showing that it's moving up, but that's not strength. That's just showing a slight change of direction. So now, I thank you in the den, a question about the XLF. In fact, that was going to be one of my focuses. I want to look at the XLF to suggest a couple of things. The fact that the XLF broke down under the key support level, and that would be the open price of 22.19 on the 24th. On Friday, it went down to 21.98. Makes this a very critical level. These charts can look great on a very short-term basis, but all of a sudden you're looking at something that says, gee, it couldn't make a leg D. It's starting fresh now. The weekly chart has 23.29, and this is the S&P Select Financial Spider Fund, Berkshire Hathaway B shares, Wells Fargo, JP Morgan, Bank of America, Citi, USB, AIG, Goldman Sachs, AZP, Met. It has, SPG. It even mixes up some of the SPGs also in, I believe, in the REITs index, IYR. So you've got a real mix here. Prudential. I mean, you can just, PSA is in the, PSA is a what do they call it? Public storage. And it's going even, look, this is ABC, D, a very nice chart. I liked it last night. I just thought this is too tough because it's going right up against the resistance of 217.99. But this has actually started leg E in the monthly and a leg E in the weekly as well. Nice action. So you've got a real mix here, because if you go to Goldman Sachs, look at this, Goldman Sachs, look at down at the bottom here. It's trying to rally. Very nice move off the 200-period moving average, but that monthly chart still shows a lot of weakness. So when KRE is the regionals, I believe. The KRE is the regional bank ETF. Yep, the it's a Spider S&P Regional Bank. So that's A, B, C, D, E, and that's probably an F right there. Yeah, so the regionals are actually doing a lot better than the XLF. And we've seen that time and again, that the regionals, for whatever reason, happen to hold in. So I'm looking at this. I want to see where it closes today, and at this time tomorrow, where are the XLF? I'll include the KRE. Where is the IBB? Where are a number of the sectors? Where's Alcoa? Where's GE? Where's GM? This is a period where we might be seeing a rotation that says we can continue going sideways, but it's a rotational move. All right, let's go to Brenton Martinez. Brent, how are you?
Good morning, Basil. I'm doing well. How are you?
I'm well, thank you.
I wanted to backtrack just slightly. You were talking about stocks that have started to come off the bottom. I bought some calls on Noble Energy on Friday.
Okay.
Stock was at 1075. It had a nice bullish reversal candle and a little bit of fall through today. We'll see where it closes, but I was hoping you could take a look at that, please.
Yeah, I'd love to look at it, but it won't come up. For some reason, NE, let's go back to GE. Oh, something's going on. Hold on one second. GE. Have I got too many symbols on there? Oh, there it is. Oh, I just got bumped. That's very unusual. So receiving data, it should be coming. Oh, that is really unusual. I hardly ever have that happen. Oh, boy, receiving data. NE. Well, how's the weather in California?
It's beautiful.
Good. Okay. Yeah, we're starting to get pretty cool here. Playing tennis outdoors is going to come to an end very soon. Okay, receiving data. We'll do that again.
Don't sweat it, Basil. If you can't do it right this second, I can just listen until you can do it.
I've got, everything seems to be working. Okay, there it comes. Here we go. NE. We've got GE, so NE will be right here. NE. Noble Energy, there it is. So now this is a very interesting chart pattern. I was just showing a couple of chart patterns a moment ago, and the patterns that we were looking at were consistently lower lows and lower highs. There's a slight difference because Noble Energy constantly has these up spikes, and each one of those up spikes looks really good momentarily in the technicals, and then it goes plop and goes back down and makes a lower low. So the question for me would be, is this a different from a lower low? Are we going to be able to make a higher high in this particular move when the MACD is cross positive yet again? Stochastic is at 24%. It's lower than each one of those other pops to the upside. So this is going to be dependent on how the daily influences the weekly. Now, what I have gotten, I've seen this a couple of times now in a number of sectors that have been, I can only say they've just been, this is whack-a-mole. Every time they try to rally, bam, 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 they got knocked down again. But what's really interesting is, if you look at the stochastic from the low of, it's actually even before the low, but we'll take the low of the week of the 7th of August, when Noble was trading at a low of 1136. The MACD was much higher than it was, say, in January of 2015. And the stochastic was low. It was in the 6%. Let me just check. It was actually in the 3% area. And all of a sudden, we're looking at the stochastic now at 16, almost 17%. And the MACD is just for the first time about to cross positive since it did that way back in, I think that was February, back in April of this year. So that makes it really interesting. And it says, if Noble, are you in it? Sometimes you're in it already when you call. Or is this time one of those times you're in it already?
Yeah, like I said, I bought this on Friday. I bought December 11 calls.
Okay. Now, this is a little different. Sometimes I say it's great if you've bought the calls because it gives you the kind of time you need. In this particular instance, you're now in a profit, an immediate profit, really quick. It's a little unusual to be able to get something like one of these energy sector stocks and get such a quick move. So, and we've seen it before in this particular stock that the second bar, the green bar, is, if it's very strong, it could pull back immediately. If it gaps up but it's still underneath all the previous lows, highs, then you've got maybe another green bar to go. So here's my thinking. This is the opportunity for a call in the sense that it's the least risky because the MACD this week has a chance to cross positive. If the MACD in the weekly chart crosses positively, then all of a sudden I would suggest that you've got yourself support. It's at 12.17, up 70 cents. You've got support in the 11.50 to the 11.10 area, 11.20 area. Now, if you are in that position, it says to me that you have no stock. You've just got the calls. Are you going to think of adding the stock itself?
My intention was to actually exercise some of the contracts to buy the shares.
Okay, then this is what I'm going to recommend. The difference now between a call in the previous up spikes is that this is the first time that I've got a sustained divergence in the weekly chart. And it's the first time that that's in the stochastic in the weekly chart, and the MACD has the chance to cross positively in a instead of those sudden moves. I like the gradual move in stocks like this that are trying to come off a low. So when I look at this stock, my thinking here is if you can see that high bar of the 18th at 12.57, if that can be reached anytime this week, and this is one of those cases where I'd like it to tag that number. I'd like it to pull back maybe just a little bit, but the same day that it tags the number, I would love to see it close in the 12.63 area. Why? Because the candle that we're looking at with that long-legged doji of the 17th of September, where the MACD and the stochastic were peaking, but the stochastic had that what I call the right shoulder failure pattern. What will happen is, if the stochastic at this point, which is at 24%, if it can get there, if the stochastic's at between 29 and 31%, I suspect that the MACD will have expanded quite nicely, even though it might be intra-week, but it'll push the weekly stochastic into the 20s. And you really need to see, for me to go from a buy signal to even the suggestion that I might be getting a buy mode, that stochastic has to be up in the 20% or higher area, and the MACD must have crossed over, and you need to have pierced the left side high bar of significance, and that's the high bar of the 25th at 11.64. So you can see how I'm trying to put the package together. Here's the other thing. You see this cup formation at the bottom? If you can get a left side, right side price move, that would say, on a most conservative basis, if I take it from the left side to this bar right here, let me just do this visually, and then I can talk about it. There's the green bar, and that's what you want to see. And that green bar says from there to there. Okay, it says that by the end of October, beginning of November, NE, which is Noble Energy, has to be closing above 1420. Because if all it does is it goes to the 1270s and then pulls back, you're in this pattern, that rectangle pattern that just goes sideways for a while. So your entry point is great, and the fact that you've got a call position is different because now you can hold it. Thanks for calling.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
All right, folks, so here's that 10-minute chart of the EMinis. See, we're going sideways there. Sideways is good, except if it forms an H to an M pattern. All I can say is that at this particular point, it's holding, but a close below, talking 10-minute chart, remember, a close below 1960.50, let's call it 1960. A close in the 1959s on any 10-minute bar suggests that you could go down a little bit and test the 1955 area. Now, just to cover what we're looking at this particular point, okay, to move out of this, I want to go to the, and great call, Brent, on that Noble Energy, a Noble call, PLC, and I've drawn in the pattern here, and it says that it's up against a dashed line. As long as they keep moving towards this dashed line, what I call the Chapman wave, inside wedge target line, that's going to be good. And as long as the MACD can, a little later on this week, close positively, that'll suggest that it's making a cup formation, and not from the low. I'm taking it from this bar right here, the bar of the 18th of the weekly chart, 18th of September, as the high from the left side, bumping up against the high of the 17th of July, that bar. So I've gone to that, and that takes us to 20th, the week of the 20th of November. I don't like to go out that far for something like this because it's just a waste of time. All it needs to do is pull back under today's low of 1155, and suddenly Noble Core is looking just like it's the same old pattern that pops and drops. So this is what you need. You need to get into that candle. You need to get into the 1267 or higher area, and you have to do it fairly soon. So now let's do this. I want to go through a couple of things. In the SPY, you remember I spoke about the SPY, and I said that this is what I call a Chapman wave price reversal spike low, the low of the 24th of August at 182.40. Very soon after that, I said it doesn't tell me the height, but what it does tell me is that for at least 28 sessions, that's 28 daily bars, there should be no test of the low of 182.40. You should get close, but you shouldn't test it. After that, certain ththings happen. If you rally sharply, whatever the price is, and it can go above the previous high of significance, this is the high of 208.89, there is a chance that you could now double that again. Now, that would take us into, that really would take us into November. I'm not sure that that's really, no, it wouldn't. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this is the 29th bar. So we can take one away, 29th or 30th bar. So yeah, that could take us a little higher. So I'm just saying that it's worked in the first step. I don't know about the second step yet. That's always a mystery to me, how or why it's going to work. But that is the potential that if you take out the high of significance, you can raise this, the support level. And at the same time, if you're looking at the 200 period of 203.26 on the SPY, it's at 197.28 up 2.29. All I'm looking at is that the weekly chart could in fact make another arch formation, just frustrate everybody. Now that's the thing that I'll be talking about, and I will start. Now I can do it because we've completed September. Now I can do it for subscribers. I can look out and I can start saying, if such and such happens, there's a chance that we bull support in a rotational fashion that says a huge chunk of the move down has been made. We could do, and we've done probably maybe an internal low, but a residual low still has to come. And that residual low might, in fact, see the end of this particular sell-off. But if other conditions are not met and we break certain parameters very quickly, then we're looking at a test of 182.40, the August 24th low. At this particular time, I think the fact that we've got GE, GM, and we've got some Alcoa, we've got some of the cyclicals, the deep cyclicals rallying, is saying to me we've got some upside strength. Hey folks, thanks for being here. I'll be back tomorrow. Have a wonderful day. Check out my opening call. I think you'll find it interesting. And
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.